Hey everyone, Rob Foley of Foley Properties at Keller Williams Realty here in Nashville, and it is the first week of September, and so you know what that means. It is our most recent edition of the Real Real Estate Show, where we dive right into the real estate market here in Middle Tennessee. We can see how everything has been performing, and let's just go ahead and dive right in because as anyone who's been in the real estate market here in the last 3 to 6 months knows, our market has changed pretty substantially since spring of 23. It's changed, night and day substantially compared to spring of 22, but that's a whole nother story. And let's look into some of the numbers and figure out kind of why this might be occurring. And first things first, we're going to start with months of supply. Months of supply is just a real estate statistic that helps measure supply and demand, and this is just a general number for Davidson County. Now, it's a general trend line, I should say, too. And this shows the last 3 to 4 years. You can see we're at 3.5 months of supply. You might be thinking, Rob, I have no idea what this means. What does 3.5 months of supply mean? Just looking back historically, you can see 3.5 months is considered a seller's market. And the reason why I say that is 6 months is kind of that point of equilibrium. That's where typically real estate economists say it's the tipping point. Above six is a buyers, below six is a sellers. Think back to 2011, 2010. You can see 11, 10 months of supply. That was an extreme buyer's market that we were in. Think back to beginning of last year, the extreme sellers market we were in. There was 2 months of supply. 3.5 is still a strong sellers market. Now, again, you might be thinking, well, what does that mean? You're saying the market has changed compared to a year and a half ago or even 6 months ago. Why is that? I was diving into some of these numbers, and this is why I wanted to start here. Is I was seeing that months of supply from August of 23 to August of 22 it has actually gone up. It's gone up about half a month's supply. That's you can see right here, 16.7%. Substantial increase from a percentage standpoint, half a month, not that big of a deal. And yet, the reality is when I look at homes for sale, and this is the same sample area, this is Davidson County, the homes for sale is down almost that same percentage. 18.6. Now, if months of supply is showing us that it's half the equation of supply and demand. Just think of two halves, right? That's a scale going up and down, right? Think of that, the two halves. Well, one side is supply, one side is demand. If supply is actually going down, but months of supply is going up, the months of supply is going up. That means demand is actually decreasing more than supply, if that makes sense, and it is getting down lower. And now, what's the cause for that? I mean, the reality is our economy, while there are some concerning signs out there in our economy, we're not in, this isn't a depression. This isn't 2008, like what's going on? Obviously there's one thing to blame in my opinion, and that is interest rates. Now there's a lot of different ways we can go, and I'm not trying to point fingers, and I shouldn't even use the word blame in here, but the reason why I share this is interest rates are actually the highest we have seen in 22 years. It's pretty substantial rise. I mean, if we go back, just look at a 3-year trend, you can see how just the end of 2021, 30-year fix, that blue line is less than 3%. Today it's above 7%. That's, gosh, trying to do the quick mental math. That's three times, roughly 2.5 to 3 times higher than what it was 2 years ago. If you look back at the all time trend line, again, this number being in the low sevens, excuse me, according to this trend line, it's actually closer to the high sevens. When you talk to a lender, that's a whole nother story because this has to do with points and all that. When you look at that trend line, you can see it takes us all the way to 2001 to get back to numbers that are in the sevens like this. So it takes 22 years ago is the last time we saw interest rates like this. Now think about what home prices were doing 22 years ago. I mean, they were roughly, a third, 30% of what they are today. So it's a pretty substantial change for most home buyers. And that's, to me, that's what's causing this. That's what's causing this change in months of supply, where we're seeing months of supply rise while the amount of inventory is still going down. I mean, just put yourself, excuse me, in the shoes of a potential seller. What's your motivation for selling and trading in your, say, 3% interest rate on your mortgage for a 7% interest rate? Unless you need to sell, unless you're moving across country for a job or for family or whatever the case might be, unless you need to sell, those days of the superfluous moves just to get a little bigger backyard or to get that extra closet space, it might not make financial sense for a lot of people. And so just throwing that out there now. Well, what does this mean to y'all? Because the reality is this is a funky market that we're in. Again, supply is from a homes for sale standpoint is down. And this isn't just Davidson County. I mean, I can pull up other counties, just pull up Rutherford County. You can see same thing as it's loading. Hopefully it goes for me as I'm recording live. Let's just pull up a different county and hopefully it'll load for me. Otherwise, I might have to just refresh Real Tracks. But you can see, I mean, that the reality is pulling up Rutherford. Well, of course, the system's not going to work while I'm recording a live video. That's just Murphy's Law sometimes when it comes to these. That's okay. Well, here's Davidson County. And you can see, well, I'm just looking at sales price. Let's see, since Davidson went, let's just pull up Rutherford. Please work. It's all good. Point being, though, what does this mean for y'all? Right? I mean, what does this mean for you as a potential home buyer, potential home seller? Here you go, months of supply. You can see also up 13%. It's 2.6, so it's a lower number here in Rutherford County. However, homes for sale, same thing. It's down almost 20%, and yet months of supply is up 13%. That shouldn't be the case typically in a real estate market. Typically, inventory hopefully would be trending the same type of way of months of supply. That's what helps keep the market somewhat balanced. Again, what does this mean for you? To me, this means a couple of things. If you're a home buyer, this line trending up, which again, this is still low. This is still seller's market territory. So this still, when I say the following, don't think you can go in and get a home for 80% of asking price or anything like that. And yet, this might be an opportune time to strike as a home buyer, especially if you don't have a home to sell, if you're a cash buyer. Maybe you can buy before you sell and you can carry two mortgages. This might be a great time to strike because the reality is we're seeing the trend line go in an advantageous direction for buyers. For sellers, it might be cause to say, hey, the market really is changing. Jump on now and sell before things really shift. Because if you look back historically at the real estate market, and let's just look at months of supply for a historical run, you can see that while the last few years, really since COVID, this trend line has been kind of wonky. Before that, there's a bell curve here. I mean, really every year you can see it goes up in the middle of the year, months of supply, and then goes down, goes up, goes down, goes up, goes down, etc. Like that's typical for the real estate market. Now, 2021 was really crazy because it went up, but then it never really peaked and it just cratered here. Like for instance, Rutherford County, 1 month of supply. That was in 21. It's kind of looking the same right now. It might crater again in terms of months of supply if we don't get any supply out there. But the reality is that there's two sides of the equation. And just because we don't have any supply right now, demand is shrinking faster than supply, it looks like. So that trend line might actually go up toward the end of the year or into next. My point being, if you're a seller, I would encourage you to jump on now and sell that home before the market shifts. I'm not just saying that, and I'm really not. The reality is, we know the market that we're in today. We don't know what it's going to be in 6 months or in 12 months or 24 months. And so, if you're sitting on something that you don't want to hold long term, maybe it's a rental property of yours, maybe it's that second home of yours that became an accidental rental. There's so many scenarios that are out there like that. Sell now before this really changes. When this number changes and goes up, and when I say goes up, I mean goes up substantially. I don't mean goes from, say, for Rutherford County here, 2.6 to 2.8 months of supply. I mean goes from 2.6 to 7.6 months of supply, and now all of a sudden we're in buyer's market territory. When that happens, that's when we're going to see the sales price trend line really change. And so that's one thing we didn't look at yet. And so maybe we'll close out our video looking at the sales price trend line. We're looking here, and we can look at it a couple of different ways, from median to average. You can see the percentages are pretty similar. Let's look at Davidson, just since we started there. We'll finish here. You can see the reality is, I mean, again, it's very similar trend lines. However, there's different numbers that we're looking at. But here, let's just stick with median. Median might be a good sample for just the overall county. You can see median sales price for Davidson County this month is up 2.8% over last year, which that's a good thing, because remember, if you've gone back and watched any of my videos in the past, you've seen that last year we kind of peaked value-wise at the end of Q2 last year, and we were saying that values were going to be down year over year this year to last year, because that insane peak we saw when interest rates were low and and there was no inventory. So demand was super high and inventory was super low. Like 473 for May of 22. It's lower than that right now, but it's plus 2.8% compared to August of last year. You can see 445 was the median sales price of Davidson last year in August of 23, 457. That's good. That's showing us still a positive trend line. Now, 2.8%, you might be thinking, how does that compare to other years? If we go back to say 10 years ago when I first got into the business, or, even just say 5 years ago, let's go pre-COVID, you can see here, we'll look at 18 into 19. Let's just pick August of 18, 284, which is crazy to think it was 284 just 5 years ago. And now we're in the 440s, I think about 450s, I was just saying, but still 284 in August of 18, August of 19, 310. So you can see that went up close to, just doing the mental math, 8 to 10%, somewhere right in there, from 1 year to the next. That was what we were seeing in 2016, 17, 18, 19. That was kind of becoming the normal appreciation for our market. Now, some of that I think was to correct when the market was just in the tank in 15 years ago or so, but still, typical appreciation, if you look back historically for real estate, is right around 4% every year, give or take, about a 0.5%. So just think 3 to 5% is about the norm for real estate. Long story short, when I'm seeing this up 2.8% after interest rates have kind of leveled out, meaning we've been in this, let's look at a year sample size. I mean, they're higher now than they've been, but I mean, still, we've been in this, basically 6% into 7% now for a year. Like, the market is used to it, and we're seeing that. That's telling me that the market's kind of softening, is what I'm saying. And I'm kind of rambling on some statistics here because I find them interesting, and yet and my point being that if I'm a seller, I want to hop on this now before anything changes for the negative. To me, we're at a kind of a teetering point, meaning, and let's just go back to what we started with, and we'll close it out with months of supply compared to the amount of homes for sale. Because this is rising and this is falling, if this goes up, this being homes for sale, if we end up seeing a surplus of inventory, say in the next 12 months to 24 months, but demand doesn't come up with it, which, while obviously if somebody's selling a home and they need to buy a home, there's going to be demand, but still, I'm sure you know what I'm trying to say here. If we see a surplus of inventory hit the market over the next, say, 12 months, but demand doesn't go up, if interest rates don't change in a positive way for people, then, we might end up seeing this continue to rise. Because again, supply and demand, supply is half the equation. So if we see supply go up, but demand doesn't meet it, then this number is going to go up, and we're going to see it start to teeter into that balanced market, maybe even a buyer's market. That could happen in 12 months. I mean, it's usually not an overnight thing. It's not a flip of a switch to where we're going to look at this in October next month and see that instead of 3.5 months of supply in Davidson County, we're at 7 months. Like, it doesn't happen like that overnight. But just looking back at the max, see how this changed so quickly. In May of 11, 11 months of supply. In December of 11, 7 months of supply. April of 12, 7.7. December of 12, 4.4. So from April of 11 to December of 12, it cut almost in half, going from 7 to 4. So about 18 months, maybe 20 months if I'm doing the math right. But you know what I'm trying to say, that basically in about a year and a half, that's when the market really changed and flipped on its head. And again, obviously that was a decade ago, but that was when, things were getting obviously for the better for everybody. Things were evening out, and people were starting to get equity back in their homes. Here, we'll see what ends up happening. Obviously, nobody knows, but my point being, and maybe this is the best takeaway to leave this on: operate in the market that we're in. Make your decisions based on the market that we're in, and add to it where you want to be in the next few years. Obviously, nobody knows where any of us are going to be in 3 years, 5 years, 10 years, 30 years. We might have plans, and yet we don't know where things are going to end up for us. And yet the reality is we have ideas where we want to be in the next year or 2 years, and so if your current real estate situation doesn't fit where you want to be in the next, say, 12 to 24 months, now is the time to take action before things change. Because if we get back to this, and this at the being 2011, these insane high months of supply, high inventory, low demand, if we get back to that, That's not going to be a pretty picture for any seller out there, because that just simply means in order to sell, you're going to have to drop the price and drop the price and drop the price. Whereas right now, we're kind of in my opinion, again, it's kind of a tipping point. It's a waiting game. What happens first? Do people start dropping the price, or do buyers just say, you know what, I don't want to use that high interest rate to buy this home, but I'm going to buy it, and they just end up buying it. I mean, so point being, make your decisions based on what's happening out there right now. Make your decisions based for your long term future. And if you're curious about what any of this means for your particular situation, like maybe you're thinking of moving, you're not sure. Maybe you live in Williamson County. I didn't pull up anything for Williamson, or maybe you have a certain price point, because this does change, honestly, y'all. And here, I'll just show y'all real quick before we go, so you can see what I mean. Like, let's just say Davidson County, again, we're at 3.5 months of supply. If I look at this range, 343 to 500, basically, we went from what, 3.5 months of supply, and hopefully the numbers go to 2.7. So it dropped. If we go to a higher number, like uh, let's just say 700,000 and above, you can see that when we're up here, we went from 3.5 months of supply to 6 months of supply. So that tells me the higher price points that we're in, that's basically that we're teetering in that market already, that balanced market, and just something to be considering. So point being, if you're curious about what your situation looks like, give me a shout. I'm happy to help however I can. As always, I appreciate y'all checking this out. As always, there's no question too big or too small. I'm happy to answer them all. Just give me a call, and we'll go from there. Thanks, y'all. Talk with y'all soon.